IMF's Middle East and Central Asia Department. Reza Moghadam, he's the Vice Chairman for Global Capital Markets at Morgan Stanley and the former Director of the IMF's Strategy Policy Review, as well as European departments. And Dr. Nasser Saidi, it's great to see you, sir, founder and president of Nasser, Saidi and Associates. It's fantastic to join you all today to talk about these issues. I just want to mention that in terms of what's happening throughout this meeting, you can send your questions and we'll make sure to pick up on them throughout this event. And also you can follow us via social media within the hashtag MENA. We're going to have English and Arabic translation, so fantastic opportunity to get those questions in and to talk about some of the things that are most pressing on the minds of folks around the world right now, but particularly right here in this region. So just to kick off, I want to do a quick round robin with our panelists. You know, obviously we're not going to ask you who you think is going to win the US election, but I do want you guys to weigh in on the idea of how important the results of this election are for the future of the global economy. Jihad, I want to start with you.
Well, thank you, Hadley, and I would like also to thank all the participants at this webinar today. Let me look at from the lens of the region, and I will leave maybe the international views for Gita and for the other panelists. Of course, we are currently in a moment where uncertainty is high. And uncertainty is on many fronts, of course, the US election and the outcome of the US election, but also some other important issues like a risk of a second wave, how fast and the economies will be able to recover, especially those where sectors like tourism, trade were mainly affected. Also, the issue of how the international capital markets will react to that, because as you know, 40% of the EM issuance over the last 6 months came from the region, and therefore the developments on the international capital markets are going to be important too. And last but not the least, geopolitical dimension in the region is an important issue, and therefore also the result of the elections will be read by the region from this lens too.
Gita, would you like to weigh in on that, just in terms of how important are the results on November 3rd, 4th to this part of the world?
Hadley, hi. Elections in pretty much any part of the world, of course, are defining moments for countries and for the globe. As you know, at the IMF, we wait to see what actual policies get announced, regardless who wins. Because that's how we incorporate that into our projections. So the absence of that, we don't prejudge anything. We're going to wait and see what the outcomes are. But again, just reinforce what Jihad said, that from the global economy perspective, I would say the top 3 sources of uncertainty remain the health crisis and how this winter is going to play out and what are going to be the prospects for treatments and vaccines and better testing to deal with this crisis. I think that's going to be very important. And what we do say, which is what we did in our annual meetings, was that countries should, as best possible, not prematurely withdraw policy support, be it monetary policy or fiscal policy.
Reza, I'd love to get your thoughts on this one, because obviously no longer being with the IMF, maybe you can give us a little bit more here, but in terms of the importance of this outcome to this part of the world, how central is it?
Well, first of all, very good to be with you. Very good to see ex-colleagues from the IMF and also Nasser. The outcome is sort of critically important for the markets. I think, first of all, the US market is the most important financial market in the world. It sets the tone. And so what the policies of the new government would be, both at home and abroad, will be critical in terms of perceptions in the market. But also, I think as we move forward, as we try and deal with this pandemic and its economic consequences, the international dimension of the policies of the US will become more important. Some of the international fora, like the G20, G7, etc., have been fairly inactive during the phase of the crisis until now. So the policies that the US will bring to the table, how internationally it will be critically important for both the markets and for the rest of the countries. I give you one example. The markets are very focused on the timing of the vaccine. Now, it is likely that the US will be one of the first countries that would reach the vaccine stage. A big question for the rest of the world would be, what is the US policy? What's the policy internationally for dissemination of the vaccine for the rest of the world? So I think there are market issues, but there are real practical issues which are going to have big impacts on both the US market and the global markets from that perspective.
Dr. Nasser, how do you see this?
Well, let me build a little bit on what Reza was just talking about. One aspect, of course, is the issue of multilateralism. The Trump administration so far has been unilateral, make America great again, at the expense of other policies. So one big issue is, are we going to be heading to more, or coming back to multilateralism, or it's going to be unilateralism? That's a major issue because it affects world trade, the World Health Organization, for example, the distribution of vaccines and their availability. It also matters, of course, for the US dollar. If you're going to be less confrontational and you're going to be much more open, for example, to trade with the EU and with China, then you might be looking for a cheaper dollar or a less strong dollar under the Biden administration than you would under the Trump administration. So that's a direct example that matters for us. More important, I think, is the oil market. Will you have a continuation of policies which would encourage exploration, shale oil, or do you turn towards a Biden who's much more climate aware, who's talking about renewable energy? He's got people like AOC in the background talking about green deals and blue deals and all the rest. That's going to make a big difference to how you deal with Europe and the rest of the world. And finally, I think it's a matter of confrontational. The Trump administration, insofar as the region is concerned, has been viewed as fairly confrontational on a number of issues, geopolitical issues, having to do with Israel, Iran, and the others. So will you have a hard policy continuing, or under a Biden, a less confrontational policy? And if you have a less confrontational policy, then issues like defense spending might decline. And whereas they were ratcheted up under the Trump administration. So all those, I think, affect both the dollar as well as fiscal policy, the nature of spending and the composition of spending in the region. So quite a bit, I think, matters insofar as the region is concerned in terms of the outcome.
Jihad, I would love it if you could give us just a sense of the regional outlook. Obviously, you published the report last week and we had the chance to talk about that. But as we look into 2021, the short-term economic outlook with regards to those key challenges that are facing this part of the world.
Well, Hadley, we tend to say this is a year like no other. I think for the region, it's really the case. Let's ask for first question, what has happened? A succession of shocks hit the region. The region was among the first part of the world where we had one of the epicenters of the COVID-19, and was followed by what we saw as one of the highest volatility in oil prices. And if we compare to previous shocks like 2008, for example, or 2014, this is by no means much deeper and bigger crisis in terms of the depth of the shock and also the breadth, because it was also a healthcare issue that affected the real economy. It was oil shock that affected many of the economies of the region directly and indirectly. And also it was a shock, especially with the high level of debt for countries who are borrowing on the international capital markets. What we saw over the last 6 months in terms of reaction, that countries reacted fairly quickly, introducing stringent measures among the highest worldwide, and this paid off. It helped limit the spreading. It helped also keeping the level of fatalities low compared to other parts of the world. But this is, of course, came at a high cost. The cost was also an aggravation in terms of economic activities and slowdown. slowdown, especially in sectors that are job-rich and countries where already they have entered the crisis with weak fundamentals. We saw also government in a synchronized way introducing measures, both fiscal and monetary. I would say fairly homogeneous, but lower than what has been happening in other parts of the world. And this is mainly due to the limited fiscal space. Focus was on protecting, I would say, livelihoods, income support, additional spending on healthcare, and liquidity and financial support to SMEs. Those measures were useful in order to provide the floor, and it helped cushion a bit the drop in economic activities, but yet it was not sufficient to, I would say, to provide a limited impact on the economy. And therefore, we expect growth this year to be on the negative in almost all the countries, except very few. Egypt is one of the exceptions. But on average, oil exporting will be hit more. For MENA, we expect growth to be negative 6% for oil exporters, not only on the oil sector side, but also on the non-oil, especially because of the fact that their economies were diversified in services. Non-oil economies were affected. I would say compared to April, our projections remain the same, -1%, but we have here a big diversity. Where do we stand today is the outlook for next year is showing a recovery, but I would say relatively speaking, compared to other parts of the world, the recovery is a bit slow, and the uncertainties are high. Uncertainties on how we address a second wave, how we react to it, how we repair the engines of the economy that were affected, especially sectors that were hardly hit, and can we start preparing the recovery? And those are, I would say, the key issues that during the annual meetings, we met ministers, governors during the meetings from the region. Those were their questions. To which extent we can still extend what we have already introduced, how we can at the same time preserve financial stability while providing support to SMEs. And in terms of recovery, what are the silver linings or the sectors where we could invest in order to accelerate recovery? This is more or less where do we stand today. It's, of course, a fascinating moment, but of course, too, for decision makers, it's not one of the best moments to be making trade-offs. Over to you, Hadley.
Jihad, how central is the health of the Saudi economy to a recovery in the Gulf Arab countries? Because regional behemoth, the biggest economy in the GCC, what happens in Saudi Arabia doesn't stay in Saudi Arabia. And it does have an impact on jobs throughout this area. How key is the health of that economy, frankly, to recovery in this part of the world?
Well, of course, Saudi economy is the largest economy and affects the region from different angles. One is the oil. And everybody is looking at now prospect of extending the OPEC Plus agreement next year, and what could be the impact of a second wave in terms of demand. You recall that during this year, we saw the highest level of volatility. We saw oil prices that we did not see since early 2000, 20 years ago. We saw at some point in time a gap between the supply and the demand of more than 20 million barrels a day. Therefore, yes, of course, I think the oil angle is very important. The other important that we expect that revenues will drop for the GCC countries by more than $220-something billion this year, which is also will impact in terms of remittances, other countries, in terms of capital flows. But I think what is important today is we're seeing in terms of stimulus measures in the GCC relatively to comparables, amounts or magnitude of stimulus that is relatively limited compared to other parts of the world. And this is due to the fact that they have very good health systems, especially for the nationals. And also they are still in a wait and see mode in order to see how the new global economy will look like. The next version of global economy, is it going to be driven by services or not? And therefore, in their diversification strategies, what are the area where they should put emphasis on. I think technology in the very useful. The fact that they have invested in the 5G and other tech-enabling infrastructure would be for them, I think, the avenue going forward in terms of growing the economy and addressing the scars of this shock, with an attempt to gradually become less and less pro-cyclical.
Reza, I want to bring you in terms of the capital markets. We talked about that a little bit earlier in terms of what the impact of the election could potentially mean for the markets. Obviously, what we've seen in the U.S. stock market, that's been an incredibly volatile, wild ride, if you will. But here in emerging economies, where do you see the main drivers? We saw the capital outflows, and then there was a partial reversal. I just am curious to see, in terms of the MENA economies, where you see this headed. Are there going to be a continuation, do you think, of the ability to tap the international debt markets? Because at some point, you got to pay all of that back, at least in theory.
Very, very interesting area. I think, as you said, we saw massive outflows from all EMs at the beginning of this crisis in March, April. But we have also seen, rather unusually, massive reflows back to the emerging markets. So this is in huge contrast to the 2008-2009 crisis. In 2008-2009, you had continuous outflows for several years. And when the flows restarted, they were quite anemic through 2012. So the fact that you have had a massive reversal of flows into the EMs is positive, and probably one needs to commend the policy actions that were taken across the globe to stabilize the markets and enable people to take risk. Now, coming to the region, if you, for example, look at the sovereign markets and sovereign flows to the EMs and issuance, the region has been one of the beneficiaries. So, for example, 35% of all sovereign inflows into the EMs have been to the region. That's quite high. Asia has benefited from these inflows, but so has the MENA region. In contrast, when you look at some other regions, for example, Latin America, the resumption of inflows has been very, very small, or to emerging Europe, it has been small. Now, within the region, of course, also there is huge diversity. You have very strong credit in the region, countries and corporates that have very strong balance sheets, and the access for those is incredibly easy. You have a middle group of countries where the market is worried about where oil prices are and where they're going. Market is worried about where the fiscal deficits are. So those issues, the countries need a plan, but they have access. And then you have a high yield credit in the region, which where the access is difficult. There, I think the fund has played a very good role. If you look at some of those credits, like Egypt, they have been able to access the market. Why? Because the market has comfort in terms of the framework that some of those countries have, being endorsed by the fund and the country being in dialogue with the fund. So the range is very wide, but the market is definitely open, but there is differentiation.
Gita, weigh in on that one, if you will, in terms of the biggest challenges that you see facing these countries, because obviously there are a lot of questions about the ability of policy to go only so far. I think you're muted.
Was that to me?
No, that was me.
To Gita. I think she's unmuted now.
Yes. Now, what I was saying is that the pandemic basically brought to halt economic activity pretty much everywhere in the world in the first half of this year. And if you look at the different countries and you see which ones have been harder hit, you see a clear pattern, which is that, of course, one, those have had a harder time dealing with the pandemic have been harder hit. Those that rely more heavily on contact-intensive sectors like tourism and travel have been harder hit. And oil exporters also have been hard hit because of the collapse in oil prices, even if it's partially recovered. A second factor has been pre-existing economic conditions, which is, did you come into this crisis with very high levels of debt? Did you already have high levels of fiscal deficit? Were your growth prospects weak? And that has also played a very important role, because you can see that in terms of the size of policy packages that have been deployed. 12 trillion has been put out in discretionary fiscal spending, 12 trillion, for the global economy as a whole. But if you look at it, the vast majority is in advanced economies. They've spent about 20% of their GDP. For emerging and developing economies, that number is 6%, and for low-income countries, it's 2%. So just to echo what Reza said about the heterogeneity, even on the markets front, it's absolutely true that despite having one of the worst crises since the Great Depression, there is no financial crisis. There's been relative tranquility on that front, and thanks to the very large support provided by central banks around the world. But again, there is heterogeneity, because yes, while there's been record amounts of, for instance, dollar issuances by borrowing by emerging markets, Sub-Saharan Africa hasn't been able to borrow a dollar since February. So there are entire regions that have been excluded. I think the question from policymakers' perspective is this is a very difficult time for multiple reasons, and especially if you're in a developing economy or an emerging market. You have restricted amount of fiscal space, and you're working under tremendous uncertainty, because there is a possibility that in the next few months, there will be a clear end in sight, at least in terms of, okay, there will be production of treatments or vaccines that can get us out of this crisis on a more permanent basis, or there may not be. And so the question is, how do you use your scarce resources? And what we've been saying is, of course, you have to do this. If you don't have the fiscal space to go much more broad, is you have to do much more targeted. Health, education, income support for the poor are absolutely important. As best as possible, trying to protect firms that are vulnerable now, but are likely to be viable. And then there is a big issue of scarring, which comes from the fact that we're going to have many companies come out of this, with much more difficult balance sheets. There is still uncertainty going forward that's going to weigh on investment. And lastly, we're looking at structural transformations around the world. And especially if you're a country where 50% of your economy depends on tourism or depends on oil, there is very deep questions to be asked about where growth will come from in the future, and how will you rebuffer up for the next crisis. So there are many challenges coming out of this. There is no simple solution. There's no snapping of the finger to make this go away. But I think at the minimum, the fact that we've avoided a financial catastrophe means that it's given countries some breathing space to deal with this crisis.
Dr. Nasser, I'd love to bring you in on that one specifically in terms of where do you see the toggles there, the opportunities in terms of, we've been through crises before in this part of the world. This is, though, as Gita says, unlike anything that we have ever seen before, but there has at least been an effort to avoid catastrophe at this point in terms of the policymakers and what can be done at this point. Weigh in on that one in terms of where you see those opportunities.
I think let's agree that this is the biggest crisis since the Great Depression, insofar as this region is concerned, both in terms of the decline in GDP, and particularly because it affects both oil as well as non-oil GDP. I think that's one aspect. And most importantly, I think it hits diversification strategies. Remember that, particularly for the oil producers, they were counting on trade, tourism, greater openness, and services in order to diversify their economies away from oil dependence. And they're still highly oil dependent, as we know, whether it's because of trade, whether it's because of production, or whether it's because of government revenue. So if you want to diversify, you've got to think of those three aspects. Now, they've been hit on all of those. So I think one big question for policymakers today is not so much any longer the setting of monetary policy or fiscal policy. We've seen them being much more active than they were during the great financial crisis or the decline in oil prices in 2014, 2015. But the main issues is how do you move forward on your diversification strategy? Where are you going to be heading? But more important, I think I'd like to open up the possibility of talking about structural reforms. It's not so much your fiscal policy and your monetary policy, even though those are important in the immediate year coming through. But what we've seen is, of course, weaknesses in a number of areas. If it's looking at monetary policy, then you don't really have the monetary policy instruments. You can't conduct QE like the advanced economies have been able to do so. You don't have active treasury bill and bond markets to be able to conduct open market operations, inject liquidity. So you're highly dependent on your banking sector. And your banking sector is highly exposed to the sovereigns across the region, but particularly in the GCC countries. When you go to fiscal policy, again, fiscal policy doesn't always have the instruments in order to help the economy. Yes, the countries like the UAE, Bahrain, and others have been active, but we're nowhere near the sort of support you've had in Europe or the United States as a fraction of GDP. But most important, I think, is the weakness in terms of labor market and the near absence in many countries of social safety nets. You don't have unemployment insurance. So things like income support, which are very important for households, and particularly for youth, is virtually absent. And the problem, I think, as we move forward, is this issue of structural reforms that need to take place, whether it's in terms of the labor market, social safety nets, or more importantly, having to deal with the issue of government procurement and other issues such as corruption. I think those have come to the fore right now. And it's going to become increasingly important as we go down over the medium term to start addressing the structural issues and less the monetary and fiscal issues. Even though on the fiscal side, you've got to diversify your sources of revenue. We know that. The GCC countries have done well since the last financial crisis by coming in and bringing in VAT, but we're still far from having a wide panoply of fiscal instruments. You need to start thinking of introducing fiscal rules. And the reason why that's so fundamental is that oil prices may not recover very quickly. And so you've got your new oil normal. And as you're entering a world in which climate concerns become much more important, where Paris agreements become much more important, there's going to be a come down on the demand for oil. And you're going to run the risk that your oil market might not recover very quickly. In the meantime, your fiscal deficits are running around 10% of GDP. You've been able to finance them this year, but it might become more problematic as you move ahead. So you've got to start focusing much more on the medium and longer term in terms of the settings of policy. And that's why I think structural reforms are going to be much more important in the years to come.
We've also got a question from the audience as well. And I want to remind all the viewers that if you want to send in your questions, you can use the chat function on your screen. But this question is from Michelle Dunn with the Carnegie Middle East Program. She's asked, the IMF put out a report on fiscal sustainability in the GCC back in February of this year. And they pointed out that the region was far behind the needed diversification away from oil and predicting that much of the wealth of this region would be gone within 15 years. Without significant cuts to spending. And she's asked, how do you believe this pandemic has affected that assessment from February? I'd love it if Jihad and Gita could both weigh in on this one. Jihad, if you want to go first.
Well, Hadley, this crisis is about disruption and acceleration. You have a disruption in certain sectors, like, for example, trade, tourism. And those we need to wait until we see clearer in terms of how the economy in those sectors will be after the pandemic is being addressed. And you have accelerations. And technology proved to be one of the area where economy can accelerate, both for oil exporting as well as also for oil importing countries. Few issues are needed in the region. One is the capacity to work remotely is a bit lower compared to other parts of the world, and this could impair the recovery going forward. e-learning and also using technology to expand the knowledge base and the training base is also something that needs to be addressed. The issue of importance of remittances is also something that will have an impact on the labor market, will have also an impact on the neighboring country. 16% of the global remittances are coming from the GCC. They are equal with Europe. Therefore, we will have disruptions, but also we will have accelerations. And we're seeing countries trying to reposition on how to make their economy benefit from this advance in terms of infrastructure and technology. Here, I'm talking about the oil exporting countries. But here, there is also another issue. Countries who have less buffers, they will be limited going forward. And we see this as an issue today. For the oil importing countries, the picture is different. And the picture is different because we have higher level of informality. And this is also during this crisis was one of the lessons that when you have high level of informality, it's very difficult to provide the right support. The issue of inequality that is still high, that needs to be addressed. And this crisis showed us that social dimension is a key pillar in any recovery going forward. Going back to Michelle's question, I think countries in the GCC and the oil exporting have been successful relatively in diversifying their economy more than diversifying their revenues. Although we saw some good practices and good reforms over the last 4 to 5 years, I think going forward, we need to accelerate that. And more importantly, we need to decouple the cycle of oil from the cycle of policy management, especially on the fiscal side. With that, what needs to be done? I think 2 things are important at this stage. One is to prepare the recovery, that if we don't have a proactive policies, the region could take the region 10 years to regain, I would say, the trajectory that was set for the region pre-COVID-19. And therefore, we need to start preparing from now. And we see in our discussions, we had a discussion on Sunday with the GCC ministers and governors of central bank. We see this as an important issue, but also addressing the sustainability of their macro is important. You know, debt went up in the last 10 years by 30% in oil exporting countries. And the speed at which it's going up, it's something that needs to be addressed. Last but not the least, I think I see a new potential in a new form of cooperation that I would call partnership. Markets need to be open up and to become more integrated. With technology, it's not only about reducing barriers, it's creating platforms that can serve broader market. And I think this is now the opportunity to look at how to partner differently in order to create larger markets for a potential recovery. I'm sure there are plenty of other issues. Gita will cover, I would say, what the planet is doing. But I see those to answer Michelle's question on the GCC specifically. Gita?
I know you want to weigh in on this, but also you had suggested talking a little bit about where the oil market looks likely to go in the near and the medium term. And obviously that has an impact on this.
Yes, sure. I mean, I think Jihad, as I expected, covered it all. I would just emphasize, I guess, 3 points. One is, yes, on the future of oil. Everything that's happened in the last 8 months points towards a future with an even faster decline in the demand for oil. So we've had a trend decline, but then that will likely accelerate following this pandemic. We've had the disruption that's come from drop in travel and tourism. We still have the uncertainty coming around with the second waves. And also, we are seeing a shift around the globe in terms of policies to move towards more renewables, towards climate change mitigation. And all of that is going to have an effect on oil demand, if not now, but over the years to come. Now, of course, the GCC being one of the low-cost producers of oil will gain in terms of market share, but again, over a pool that is shrinking over time. So that, I think, is an important factor to keep in mind for the region, because the importance of diversification is just even more salient at this moment. And as Jihad said, there's no reason to assume that these economies will necessarily then shrink in a dramatic way as long as steps are taken to diversify and find new sources of growth. The second point is across the globe, and this is not just for the GCC, but pretty much every region in the world, maybe with the exception of, not even with the exception, I was going to say with the exception of China, but not even with the exception of China, the projected level of GDP for countries in 2025 is lower than what we had pre-pandemic. So we're looking at a whole, a scenario where we have countries that are going to exit the pandemic with much higher levels of debt, but with a lower potential tax base because you have lower projected levels of GDP as compared to before. So this is going to be a challenge everywhere in the world. I would say the one silver lining is that interest rates are expected to stay low for long. And if countries can lock in those interest rates for the future, then of course that helps with debt servicing ability going forward. And that can be quite significant in some cases. Let me stop with that.
Reza, I'd love to bring you in on a question we have from Raj Dwivedi. What would be the economic impact in terms of the positive of recently signed agreements between the UAE, Bahrain, and Israel? Do you believe that we're going to see a significant impact on GDP? This is a story, obviously, we're covering quite heavily on CNBC.
Again, from market perspective, if you have predictability, if you have lower geopolitical tensions, it's positive. It enables activity to take place. So in that sense, yes. But I think some of the points that Gita, Nasser, and Jihad have made, I think, are probably more important in terms of where the region and where the global economy will go. I think some of the points that Nasser made in particular, in terms of the importance of structural changes that the societies need, and this is not unique to the region, using the room that Gita just mentioned. Interest rates are incredibly low, policy is incredibly supportive. So probably country strategies that take advantage of the supportive policy framework and increase the growth potential. And in some cases, there is no choice. You have to go there because many of the constrained sectors, high contact sectors, will be constrained for a while. So policy has a huge role to play here to facilitate the economic transformation. I think people in the market very much endorse the message of the IMF at the annual meetings that says keep policy supportive. I think that's important. But then you have one additional step, which I think in the document that Jihad and his colleagues have circulated, the last chapter of that, you need a multi-annual framework to then translate that accommodative policy into changes that you need to make by individual country. And the heterogeneity in the region is very, very large, so you cannot have a single solution. But you need to do what I think Nasser said, that is probably the most important, to take advantage of this to achieve the transformation that is necessary. And as Gita mentioned, some of the countries in the region would be affected even more than they were before the crisis because of the transformation that is likely to take place towards a green and digital economy.
Dr. Nasser, could you weigh in on this one as well, in the sense that game-changing element potentially there?
I think it's very much linked to the previous question you got concerning long-term fiscal sustainability. And the financial risks are very large. Let me explain how those are. The longer we are in low-price energy markets, low oil price energy markets, the longer it'll be, the longer the issue of fiscal sustainability will arise for the GCC countries. So you're running the risk that the markets will start turning and saying, with climate change with policies diminishing the demand for oil, with greater energy efficiency across countries in the world, you might end up having stranded assets, that your fossil fuel will end up being a stranded asset that may not be worthwhile to extract from the ground. So I think what is critical is to start thinking of policies whereby I de-risk my fossil fuel assets. So from that point of view, Saudi Arabia last year privatized part of Aramco, 5%. Had they had more leeway, had the markets allowed it, many other issues, I would have gone, say, to 30 or 40% were that feasible. And the reason is that if you look down and look ahead, then fossil fuel assets will become highly risky assets. And once the financial markets wake up to that, you might end up having what we call a Minsky moment, whereby they will lower the prices of anything that is linked to fossil fuels, whether it's oil companies, whether it's sovereigns, whether it's any activity in the region. I think this is a big risk for us. And I think climate risk, given COVID, I think climate risk should now be on our agenda, because we are in a region which is highly vulnerable to climate change, whether it's because of temperatures or because of lack of water and because of our high dependence on fossil fuel. So I think I'll just put it this way. This is a moment of opportunity in a lifetime that we got hit by COVID. We should go back to the drawing board and ask ourselves, not only how should we diversify, what sort of fiscal policy rules should we be imposing, how do you develop monetary policy to be much more supportive of economies, how do we conduct counter-cyclical fiscal policies, but importantly, again, structural change. What do we do about the labor market? Something like 68% of the jobs in the market, in the labor market, are informal, 68%. So those young people in particular don't have any certainty about their future income. So it's not surprising when you had a survey done just about a month ago, 47% or so of Arab youth wants to migrate. They want to leave the country in which they are. And the reason they gave is very clear. One is that there are no growth prospects, so I don't see where my next job is going to come from. And the other issue they pointed to was corruption. But this issue of growth prospects and job creation is the critical one for the countries of the region, nearly across the board. 60% of the countries have youth below 30, right? So where are the job opportunities going to come from? They cannot come from the public sector. So it means you've got to turn towards the private sector. You've got to go towards privatization. You've got to review your policy for state-owned assets, for state-owned enterprises, government-related enterprises, and create space for the private sector. And that's where Jihad's point about technology can become important. Digitalization has got to be adopted very, very widely. And COVID has brought out the weakness. We are, in many cases, the poor, of course, are not digitally connected. So what does it mean to work from home if you don't have broadband? What does it mean to have distance learning if you don't have access? I think those issues point to a landscape that we need to avoid.
Gita and Reza, I want to ask you to take one question. This is from YouTube. Do you see a role for sovereign creditors with low borrowing costs, passing on those low costs to support fiscal borrowing needs in MENA countries facing serious fiscal constraints, or is IMF support enough? Gita and Reza, if you'd like to take that one on. And just a reminder, if you want to send in questions, use the chat function on your screen. Go ahead, Gita.
So again, just to point out that because of the large amounts of monetary easing that's happened, the liquidity injection, the asset purchases by central banks, interest rates have come down considerably around the world. And if you are an emerging market that entered this crisis with good fundamentals and are considered, high in terms of high investment grade, then you're able to actually borrow at interest rates lower than what you did pre-COVID. But on the other hand, if you're a country that has high levels of debt and you are viewed as far more riskier, then of course your spreads have gone up and those spreads haven't come down as much. So the point I'm trying to make is that countries with good fundamentals are being able to borrow at extraordinarily low interest rates. I think the solution for countries that are having a harder time has to be from, an important part has to come from multilateral institutions, and the IMF is playing that role. We have provided emergency financing to more than 75 countries at this point, and we're providing financing more broadly to 81 countries. And this was done at record speed. But more will be needed. There will be more financing needed on concessional terms. In some cases, you would have to think of outright grants. And another important point we've been making recently is that there are some countries whose debt is already unsustainable. And it is important to restructure that debt now as opposed to kick the can down the road, because that's going to free up your finances to deal with the current crisis. So I guess the point I'm trying to make is that you have to get the fundamentals of a country in place for there to be viable borrowing and lending to happen. And some of that will take the form of, debt reprofiling and debt restructuring in many cases. Another piece has been debt service relief. The debt service suspension initiative has played a part in that. But that only kind of postpones the payments that are coming due. It's not the full solution, but it certainly is a step in the right direction. But more will be needed on that front too. I'll hand over to Reza.
Thanks. I broadly share Gita's views. You probably need a combination of both markets and the fund here. The markets have probably been open in a much more available way than they have been previously, and that has meant the fund has not had to extend as much credit as it normally does in a crisis situation like this. But we are not through this process yet. Markets go up and down. The risk that is built will be translated into different premia for different countries. Some countries do have market access, but at very, very high spreads. So it does raise issues to do with the sustainability. I must say the concern about that sustainability is probably less in the markets right now than you have in the official sector. That doesn't mean that concern will not increase, but partly because of the very low rates, partly because you do see this debt distress, but you see it in very selected cases. That concern is much heightened, and understandably so, among the official sector than it is in the markets at the moment. I think that the question that many raise in the markets is, can the IMF do more? And I think if the pandemic continues to be a problem, and sitting here in Europe, we clearly see a second wave, and we are just at the beginning of the winter, and we have seen from the first wave that it does spread globally, and it does go to the emerging markets, and the emerging market response is more difficult. So I think there is a question in the market whether the fund needs to be more proactive, particularly when it comes to a group of emerging market countries where the market access is somewhat questionable at the moment. Now, that has to do also with the policies of those countries. So you need to address that issue. But I think the markets would look to the fund to continue to be as creative as they have been in the last 6 months in the next 6 months. And I think one shouldn't rule out that that degree of creativity may require additional firepower to be deployed, especially if the pandemic continues in the sort of the second wave is worse than people currently expect. So I'm sure the fund has been creative in the first wave. I'm sure they will be creative in the second wave. But I think a combination of markets remaining open, the fund being proactive, is what you need for the bulk of DMs, emerging market countries, including the region.
Jihad, we have a question from Sammy Kahelo. How are the GCC sovereign wealth funds going to be able to address, he asked, the funding gap between the returns on their international investments in a protracted global low rate environment versus their future domestic liabilities, in your view, where the currencies are dollar pegged and inflation rates remain stubbornly high?
Sammy is asking an important question. I think countries will gradually move to, I would say, a balance sheet approach, looking both at their assets and their abilities at the same time and rethinking the way they manage their balance sheets. This is one important move that, echoing what Nasser was saying, that this is one of the structural transformations. What we are seeing today is on the fiscal side, we're seeing a diversification of revenues outside oil taking shape. Saudi have introduced VAT with UAE and Bahrain, and now they are increasing the rate. Oman has sent to Parliament a draft law on that, and so on and so forth. I think we will see gradually a wave of diversification of revenues outside oil. We will see also a gradual transformation of the role of sovereign wealth funds in terms of how they contribute to generating income, but also how they contribute in the recovery. The second thing that I think is a welcome move is to move from a short-term to medium-term approach. And this is where, for example, a medium-term macroeconomic framework matters. And this is the sense of our last chapter for the Rio this year is you need to anchor your policies. This is for the GCC, but also for others in a medium-term framework. This is how you can manage a short-term response to the crisis, but also maintain sustainability over the medium and long term. And I think last but not the least, if you don't create opportunities and if you don't focus on inclusion, you will be boxed in a situation where the role of the state as provider of job, provider of lifeline support will remain critical. And therefore, improving access to opportunities by working at the three level, the macro level, at the policy level, but also at the sectoral level, and the micro level, increasing access to finance, increasing access to talent, reform the labor market. This is how you can gradually reduce the need of the state to be at the center stage, and the state will become, in fact, a provider of access instead of provider of opportunities. And therefore, I think, and I would echo what has been said by many, by Nasser, by Gita, and by Reza, this is a defining moment for the region. And if I compare to past crises, one of the issues that the region faced in the past is the delay in responding. And I think if there is one message today, is the response has to be very fast. And the response is not only about addressing the short-term issues, but also work on parallel. Address the short-term, protecting lives, repairing the economy, but also plan and provide, I would say, a medium to long-term horizon. And this medium to long-term horizon would provide both investors, business community, as well as also citizen in anchor over the medium term. This will provide investors capacity to look long-term and deepen the markets. This will provide investors capacity to recover and repair some of the sectors that will be impaired and will face some scars. This also will allow those who want to accelerate the transformation to keep investing in technology. Therefore, I think we are in a defining moment, and changing the way we look at how the state used to function, especially in the GCC, is a critical piece in any problem solving going forward.
Reza, we've got a question from George Caban. Considering the financial impact on various industries arising from this pandemic generally, and excluded peril under most insurance policies at the moment, do you think it would be feasible to develop some kind of public-private partnership or collaboration for the reinsurance industry so that they could transfer the financial losses of affected businesses to traditional risk carriers and then further transfer that through insurance-linked securities, pandemic-triggered bonds and such, or global equity markets?
A complicated question, but
Yeah.
I think, having been in the market for a little while now, I think the market is an incredibly flexible place, and they would price any risk you want to insure against. The issue is that right now, assessing some of these risks are incredibly difficult. So some of the insurance, despite the very, very low interest rates, may be quite at high premium. That doesn't necessarily mean that it's not useful. It could very well be useful, but I think market would look very carefully at the circumstances wherever that region is, the individual circumstances of the corporates, the future market that corporate or sovereign would face. I think it would probably be easier for sovereigns. It would probably be easier for some of the higher credit in the region. And whether it can be available more generally, I think probably somewhat questionable in the current market circumstances. But it also depends how risk averse the markets are. At the moment, liquidity is incredibly available. And so market is prepared to take risk, even on innovative instruments. But the variability of spread is very, very large as you go to riskier credit, riskier sovereigns, and riskier operations. So short answer, yes, I think one can do it. But one has to be realistic that it may not be at a premium that people may find attractive.
Dr. Nasser, I want to ask you specifically something on Lebanon. Obviously, you're the best person to talk about this probably with regards to what's happening currently. We talk about a little bit about the U.S. election and the impact you think that could potentially have. But in terms of what's happening right now on the political side of things, obviously, without getting some kind of real partner, the IMF, there's just not much they can do. How do you see this playing out for Lebanon in the short to medium term?
Well, it's clear that any government taking power right now has got to undertake a series of deep reforms. We know that. And we've known that since several years. So I guess the main issue is whether there's appetite for reform. And what we're talking about is fiscal reform, financial sector reform, banking reform, restructuring the banking sector, undertaking some decisions insofar as subsidies, the electricity sector, large deficits arising from state-owned enterprises and that. The main issue is their appetite for reform. We haven't seen that so far. But absent those reforms, international institutions like the bank, the IMF and others, the EU, France, will not come to help Lebanon unless those reforms take place. I think that message has now become very clear. What we need to avoid is any further immiseration of Lebanon. We know the numbers, they're staggering. The IMF is forecasting a 25% decline in real GDP. Poverty rates are in excess of 55%. Unemployment in excess of 35%, and the list goes on. And budget deficits are now rising again because revenues have declined as a result of lower income, not much trade happening. And as a result, you're heading potentially towards hyperinflation because you're financing budget deficits through the central bank. And that, of course, is dangerous because you're already reaching 120% of GDP. So if you have monetary financing of deficits, then you're talking about even a further decline. So that needs to be arrested. That needs to be stopped immediately. And the message, I think, of the international community has been very clear. Lebanon has to undertake these reforms, starting with things like imposing capital controls, better governance of the state-owned sector, in particular electricity, stopping smuggling, a whole host of issues which we know we need to undertake. And those will be forced on Lebanon eventually, but the cost will be higher. And the main message, I think, is that the longer you take to adjust and to undertake the reforms, the greater the price, the greater the cost of adjustment. I think that is a central message. Will the politicians abide by that message? Will they get that? I have my doubts so far, but I'm an eternal optimist and hoping that we will get reforms through.
Gita, I want you to weigh in on this next question. It's from Sanjay Bhatia with Alpen Capital. Given expected decline in GDP, low interest rates, and various fiscal stimulus being provided by various countries, what, in your view, is the expectation on money supply and inflation rates? Will this have an inflationary impact on real estate and equity markets?
So more broadly speaking, in terms of inflation, I would say consumer price inflation, it is a good question. Coming into this crisis, this was both a supply shock and we've had a demand shock too, and we've had these big increases in balance sheets of governments. So the question is, should that be showing up in projections of high inflation or low inflation? And the answer is what we have in our World Economic Outlook, which is that as of now, what we are projecting is that if anything, the forces are more on the disinflation side rather than on the inflationary side. So at least in the next couple of years, the risk is more towards there being inflation being too low as opposed to being too high in, especially in parts of the world, advanced economies, many emerging markets, parts of the world where you have, good institutions, you have central bank independence. In those parts of the world, the projections are for inflation to stay low. Now, the question is this going to change, and is it going to be any different going forward? Again, as of now, the expectations is that interest rates are going to stay low for long. Inflation is going to be, within target. Some countries are going to struggle even getting to the inflation target. So that's where we are. But of course, there are other countries where you have problems with institutions, lack of central bank independence, and some that have undertaken, are doing direct asset purchases of government debt. All of that certainly can, sows the seeds for inflation that can be uncontrolled. And so I think there is that distinction. But for the global economy as a whole, I would say the risks are more in terms of inflation being too low as opposed to being too high in the next couple of years.
Jihad, I want you to answer a question. Actually, we've had a kind of a repeat of what we had seen earlier with regards to Michelle Dunn's question in terms of the GCC and what's happening with the sovereign wealth. But a bit more broadly, what are you actually hopeful about in terms of what's happening in the region and the outlook for the next decade? What actually is a bright spot given all the things we've been talking about?
Well, this crisis has accelerated some of the trends. What we were projecting for 15 or 20 years in terms of long cycle, still valid, but maybe accelerated. What also this crisis has showed us that also the capacity of those countries to master technology and use it for a good purpose, which is to address the issue of sanitary shock. If I compare countries in the GCC to other, comparable countries or even more advanced economies, the way they handled the COVID-19 in terms of healthcare measures, social protection measures, were very advanced and very credible. Therefore, I would see more acceleration of some of the trends. And also, one of the interesting takeaways from our discussions is decision makers are very much aware of the issues and tuned to the need to accelerate the reforms. Of course, the situation is going to be different between countries who have buffers, who have some space to do this transformation, and those who have less buffers. And those who have less buffers, they need to be more proactive in terms of working within the the constraints they have in order to avoid having difficulties and challenges in managing their macroeconomic situation. They have benefited, as I think Reza said earlier, from a very low interest rate conditions. They were extremely active over the last 6 months. GCC countries were very present on the international capital markets, using this as a way to gain some breathing space to do the transformational reforms. I think is going to be important. And they have, in addition to their constraints, but also they have some opportunities. Their opportunities is they have a young population that is now well educated. They have a very good infrastructure. They have the capacity to accelerate the transformation into a more technology-based activities. They start from a low base in terms of non-oil revenues, and therefore they can go up. And this is something that the societies have been accepting. Societies have accepted to increase rates of fees, taxes, etc. And therefore, I think we are at one of those crossroads where if things are used to the right purpose, accelerating some of the transformation reforms, reforming, for example, labor market, improving access to finance, introducing a greater space for small and medium-sized companies by redesigning the role of the state. All these reform opportunities could bring the region up to a new cycle of growth that also will have an impact on the neighboring countries. The links that exist between oil exporting and oil importing countries are extremely important, not only in terms of remittances, but also in terms of exchange of goods and mainly services among those countries. And therefore, the future of the GCC recovery will have an important impact on other countries, including countries in Asia, Central Asia, and South Asia that have a very strong economic ties with the GCC countries.
Yeah, in terms of what we see within the growth forecast for 2020, obviously what we've seen in terms of the recovery for 2021, it's now looking weaker. Through what you see in terms of those risks and opportunities to that recovery path, something we talk about on a daily basis on CNBC.
Yes, of course, I would say again, I think the major risk remains the pandemic and how it evolves in these next few months. We're seeing resurgence of cases in many parts of the world. In the US, there is a third wave. And the question is, what will be the impact of these resurgence? Will it look more like how it was in the summer in the US as opposed to the spring in the US? So in our projections, the assumption is that while there will be these further waves and there will be social distancing that will have to continue, it will have more the effect of slowing the recovery as opposed to having another major dip in terms of the growth numbers, right? And so if that, of course, is not the case, and indeed, this is going to be a very bad winter that requires some much more widespread lockdowns of the kind that were put in the spring, then that would be a big downside risk to our forecast. An event like that will also disrupt the tranquility in financial markets, because I think financial markets are working on the assumption that a lot of things will go well, including the fact that there will be good news on vaccines or on treatments, and there'll be a much better way to handle the health crisis. So if that's not the case, and we're seeing that with the turbulence, and we're already seeing that with the turbulence in markets, if that's not the case,
et donc possibilité de perturbation des marchés. Mais si
I think I'm hearing somebody translating.
I'm hearing someone as well, actually. If we could go ahead and put that up.
So the
Go ahead, sorry.
Turmoil is
continuez, Gita.
We're still hearing the translation. If someone could put that on mute.
Il y a apparemment un problème avec le canal d'interprétation.
Still hearing the translation. Technical difficulties. Could we turn the translation off?
Okay, should I try?
Okay, one more time with feeling.
All right. So yeah, so the second piece was on the financial turbulence and come with it. And like we've all recognized, we're living in times of record high levels of debt, eclipsed everything that was there in the past into the advanced economies and emerging markets. So financial distress, of course, is going to be a huge problem. The third, of course, is what happens on the geopolitical front? What happens with restrictions on international trade, with restrictions on international investment? Over the last couple of years, we've seen that increasing, but again, it's uncertain what that's going to look like going forward. So all of these are important risks. These are, and the ones I mentioned are all to the downside, but of course there is the upside, which is that you could have much better news on the health front with a clearer sense that this pandemic is going to be over sooner than what's assumed in our projections, and that would improve the outlook.
Reza, we just had another round of stimulus for the Dubai economy specifically announced in the last 48 hours. With regards to what happens to this part of the world, obviously we have multiple markets, but the liquidity continues to be a deep concern. It's just not enough liquidity in this space. Do you think that force governments, particularly here in UAE, Qatar, Saudi Arabia, to put more of an effort into making those kinds of reforms and commitments?
Maybe a couple of points also in response to what has been said before. It is probably true what Gita just mentioned. The markets are somewhat more positive about the evolution of the global economy and individual economies going forward. And one indication of that is the perspective of inflation. I personally agree with the IMF's line on inflation that Gita explained, but the markets are expecting that because policy will remain very supportive, fiscal policy will remain supportive, and interest rates will remain very low for a long time, partly because of debt, that inflation in the recovery part of this cycle is going to be higher than before, and central banks are telling us that they are aiming to exceed their inflation targets. So some of that you see, for example, in price break-even prices in the market. Now, all of that, I think, is a more optimistic view of where the global economy goes. What are the risks? I think very much built into perspective of the markets is the vaccine will be there by the end of this year, available widely next year throughout the globe. So I think that's a strong assumption, and international cooperation is going to matter a lot. Now, coming specifically to your question, I think obviously the region has specific challenges, but when you look at the globe, those challenges are challenges that are also shared by the rest of the world. In fact, when you look at the debt levels, they're exceedingly high in the advanced economies. And so when it comes to room for policy action, I think the markets will be tolerant if it is understood that they are doing that to support the economy. But I think that needs to go hand in hand with what Jihad had advocated earlier. There also needs to be a forward-looking plan. Yes, you do these measures today. What is your framework going forward? How are you going to transform your economy? How are you going to respond to the greening of the global economy? So some of the issues that Nasser said, I think in the short run, there will be market tolerance, but the focus on those issues will increase as we move forward. And so I think the funding would be more easily available, cheaper, if you have answers to those questions.
Jihad, we had a question from Mohammed Al-Dashan. What is your updated prescription for the region's most fragile states, talking Sudan, Syria, Yemen, Libya, in dealing with this economic crisis and its fallout?
Well, this group of countries have been, I would say, the most vulnerable to the shock because they started with a very weak healthcare infrastructure, both in terms of number of beds, as well as also in terms of number of physicians. And they had to resort to very stringent measures in a situation where social distancing is very challenging because of their economic situation. To add an additional challenge, some of those countries are heavily reliant on remittances. In certain cases, remittances constitute more than, I would say, 10, 15% of GDP. This is the case for Yemen or case for Sudan. Of course, those are countries where we at the fund are very, very much involved in trying to help. And during this crisis, in addition to the number of financial support we provided, and this year we provided a record level of financing, more than $15 billion for the region. It's an increase of 60% in 1 year. We had special attention to those countries. And thanks to the various instruments that were developed, we were able, for example, to provide grants to countries like Yemen or help Somalia address the debt issue. And we're currently working with Sudan. But the issue for those countries is an issue of the extreme level of vulnerabilities. You have high number of refugees and internally displaced that are in a very difficult social and economic situation. You have also in certain countries still a security situation that is very challenging. This is, for example, the case for Libya, Yemen, Syria. And I think this is a group of countries that deserves additional support from bilaterals and also from international community. And this support has to become in form of grants. I think those countries don't need additional borrowing that would make their macroeconomic stability even weaker. But this is an important group. Their support is needed because there are risks also of spillover to other countries. Some of those countries have the capacity to respond. This is the case for Iraq or to a lesser extent in Libya because they have the oil resources. And for example, in the case of Libya, they are increasing their level of oil production to 1 million barrels per day. But this is not enough. And I think this is one of the critical issues that needs to be addressed at a regional and international level. And this is what we are trying to push with our partners, other multilateral institutions, but also with key countries who are relevant in the region.
Before I let everybody go, as we're almost up on time, I just wanted to ask Dr. Nasser to weigh in. We talked a little bit about Lebanon specifically. We spoke about the potential for the US presidential elections impacting this part of the world, impacting markets specifically. In your view, does 4 more years of Donald Trump have a significant impact on the future of Lebanon specifically versus a Biden administration opening up the region to Iran?
Well, I think there are two parts to the question. One is whether a Biden or a Trump administration will push for more economic and financial reforms in Lebanon and insist that the politicians undertake those reforms quickly rather than dilly-dally as they've been so far. I think that's an open question. So far, the Trump administration has said that reforms are essential. They waved the stick of sanctions, personal sanctions on politicians. And the carrot, however, also has to be open. What I mean by the carrot is that international aid for Lebanon, effectively a Marshall Plan for Lebanon in the tune of at least $30 to $35 billion, which is what Lebanon requires. And that excludes the amount we need to rebuild the port and the downtown area of Beirut. Whether the Trump administration will be willing to push for that. We haven't seen that so far, but maybe if there are 4 more years, there will be more leeway to go for that. A Biden administration, on the other hand, might be much more multilateral in its approach, and particularly will cooperate more closely with the Europeans. In that case, the potential success of reforms and the reform agenda would be higher, because I think you need much more regional cooperation, and particularly with the GCC countries, because the bottom line for a country like Lebanon, but also Syria and others, is the linkages with the GCC countries for jobs, for remittances, but also for aid. So the bulk of aid and financing is likely to come not only from the IMF and the World Bank, but with the GCC countries. And therefore, I think a multilateral approach and a multilateral approach to solving problems across the region might be more likely with a Biden administration than a Trump administration. But these are really open questions so far.
Gita, we have one more question for you. It comes from Angus Blair, a CNBC favorite. How can governments, in your view, be encouraged or pressed to undertake more efficient policy responses to the increasing economic stresses, as it remains frustrating that conventional policies are exceptionally inefficient in job creation in terms of real estate projects, for example, and entirely encouraging more free private sector? It's something that we focus on a lot in this part of the world.
Yes, of course. I mean, the answer varies across countries, but I think we should first acknowledge that relative to the past, governments around the world have really, stepped up in many places, and we've seen unprecedented levels of support being provided. Now, this is a very unique crisis, and so we know that the impact of all of the support is going to show up only over time as we get out of the health crisis and activity is resumed. So what needs to be done more efficiently? Again, yes, indeed, if this is a country that needed to undertake very important reforms in terms of having a bigger share of the private sector, having much better health care, much better education, much better employment opportunities for young people and for women, which I know is an important concern in the Middle East. These have to be taken up. I mean, so these kinds of reforms have to be done. Now, there are places, of course, where we make a case for big public investment push, public infrastructure investment push. It has to be high quality projects, for instance, in some cases green, in some cases digital infrastructure. But all of that has the potential to create jobs, and it has the potential to hasten the recovery from this COVID crisis. But again, and this is a point that many of us on the panel have emphasized, including Nasser, which is the fact that, I mean, this is a transformational period. Structural reforms will be needed. If it has to be done with respect to labor market flexibility, with product markets, with creating the environment for more private sector participation, I mean, all of that has become even more urgent after this crisis.
And Jihad, before we let you guys go, just a question on the government's aspect of things with regards to how the IMF, in terms of the funds provided to countries like Lebanon, for example, to these countries, how they're spent to fight the pandemic specifically.
Well, Hadley,
a hold on corruption, in other words.
Two things. One, we have strengthened the framework that came with the emergency facility by asking countries to be very vigilant on the utilization of funds, make sure that those funds are dedicated to address the pandemic and address the specific issues related to that. And this is something that our board is very vigilant. Whenever we have a program or a support that is designed to help in terms of emergency facility, we are very vigilant to that. More specifically on the region, we're about to launch a study on the importance of strengthening governance in the region and why it's useful and important and critical for the region to address issues of corruption, strengthen the institutional capacity, reduce risks of corruption, and with practical examples on how to do it and how to reduce the level of corruption and risks of corruptions, both on addressing fiscal issues, central banking, monetary issues, financial sector issues, as well as also public procurement. This is a long journey. I think one of the elements that were clear or came up very clear during this crisis, trust of citizen in state is also dependent on the feeling of the citizen that the state is able to address and provide not only the right support, but also the right policies. Recent polls of the Arab young population is showing that the issue of corruption is one of their most important elements. And therefore, it's not only about economic efficiency, but also about rebuilding trust. We will be launching this in the coming few weeks. And also we will be stressing on another important dimension that came out of this crisis, that social is critical. I think one of the lessons of this crisis for the region is any economic framework, any structural transformation has to have an important social pillar. And this social pillar, it's not only about social assistance, it's about building a strong social framework that protects labor, that provides long-term and sustainable social insurances, and also addresses social protection and increase or reduce the level of inequality that exists. And this is where also fiscal will play. Therefore, we are tackling all these elements, and in the coming weeks, we will be, after the discussion of the outlook for next year, focusing on some of the priorities that are critical for the region in order to help the region accelerate the transformation, use this shock as a transformative moment, and also some of the long-waiting reforms to use this moment in order to see them happening in the region.
Guys, we're going to have to leave it there. Thank you all so much for joining us. I really appreciate it across all of these time zones. Reza, Dr. Nasser, Gita, and Jihad, of course, thank you all so much. I just want to let the audience know that you can find a recording of this event on the IMF Twitter account, imf.org, as well as on YouTube. Really appreciate all of the audience interaction, and I hope to see you all again very, very soon. Have a great day.
Thank you.
Bye.
Bye. Bye.
Bye.
Bye.